Happy Tuesday, Maverick Traders. This is Rob Reinhold. It is the currency recap. Let's get into it. Lots of stuff to talk about today. In this session, we're going to go over the news of the day, what happened, and of course, we got some tweets or some true social things that moved us around a little bit. And we're going to take a look at some setups. I still like the European currencies against the Asian currencies. Let's jump into it.
All trades and analysis in this video are intended for professional traders only. This content does not constitute financial advice and is for educational purposes. This video is being released after a short delay due to Compliance Department review. Maverick members receive this content immediately as part of their daily trading resources. If you're ready to level up, consider joining Maverick Currencies. Our traders trade firm capital and keep 70 to 80% of profits. You bring the skill, we provide the backing. Let's get into today's market recap and see how the pros are trading the currency markets.
All right, let's jump into the market and see what happened today. First off, let's talk about the news. On Friday, in the currency room, Ankit and I talked about how we had that big move on Friday. And that move Friday came from the tariff wars between the US and China are back on. Just like we saw in March and April, we've now seen volatility. We went from a low volatility environment to a high volatility environment. You need to change your trading style when you go from low vol to high vol, because in high volatility, you get very, very choppy movement. You get lots of quick moves, lots of gaps, and stops tend to get hit all the time. So high volatility markets, you really have to be very selective with your entry points and your stops, because at any time a tweet can come out. Now we're going to talk about that. The US session is more risky for those moments. If you're trading in the Asian session and the European session, you probably don't have as much to worry about. But in the US session, we have to be worried about that. We did hear from Chairman Powell today. His speech basically left more room for rate cuts and said, hey, the employment picture now is deteriorated in the US, basically hinting that there's more rate cuts to come. They also talked about winding down their balance sheet reduction. After COVID, remember, they created a whole bunch of money and it went out into the economy. And since about 2022, they've been letting that what's called roll off of their balance sheet. Remember, the way the Fed creates more money is they sell more bonds. They create bonds out of nowhere and sell them. And investors around the world buy those bonds, and that money comes into the US Treasury. And then at the end of it, what they had been doing is basically rolling it or reissuing it. When it became due, they said, hey, let's just sell more bonds to where the money supply wasn't shrinking. In 2022, they said, hey, let's not do that anymore. Once those expire, we're not going to be issuing new bonds. So what happens is they created all this money, and then once those bonds mature, they don't create any more. The money supply actually goes down. And that's what's been happening over the last couple of years. And that can be restrictionary for the economy. We really haven't seen any liquidity problems, but overall, this is bullish for markets. We also got another tweet heightening the tariff war. So on Friday, we got a tweet that sent the market down huge. We gapped down. We get gapped up on Monday. The market went up a little bit. We gapped down last night, and the market recovered. Again, high volatility. You must change how you trade in high volatility. What happened in Forex? In the end of the day, not much. One of the things Ankit and I talked about is this block right here. Now, I liked the European currencies better. Ankit liked the dollar and the yen better, and specifically the dollar. As you can see here, they're all working here against the Aussie and the Kiwi, the Asian currencies. This was the trade we talked about last week, and there's no reason to think that this trade won't continue to work. We take a look at other markets. Stock market gap down 1%, closed about flat. Crypto gap down like 4 or 5% and then recovered. And gold just keeps hitting all-time highs. Crypto is basically across the board down 2% by the end of the day. So again, gapping down and recovering. And this is what I want to show you in this chart. We had this big move here. And then we gapped up and had a green candle. We gapped down, and look at that. We had a green candle. They're still buying out there in equities. On Friday, I was really worried that this was the end of the bull market. I said, look, we break below that 50 and we hold below that 50 for a week or two. I think this bull market is over. These candles are telling you people are still out there buying equities. So I don't think we can go risk off yet. I don't think it's there yet. I think you still have to be leaning to risk on. And what's been working, risk on, what's been working is the European currencies have been the things that have been working the best in this environment. With the US government shutdown, we don't have much US data. I guess we are going to be getting PPI on Thursday, possibly. But you can see, other than that, we got Aussie employment report tomorrow night, and really that is about it. I don't expect there to be huge volatility in the markets unless we get some huge move in the equity markets. But I do think, again, this is a normal trading environment. I shouldn't say normal. What I mean by that is that the moves aren't going to be huge, but they're going to be super choppy. I don't love that, because if it's super choppy and super volatile, then I want to get compensated for the risk I'm taking. If I'm running out into a street and there's, $1 million in the road, but there are cars going 100 miles an hour, the question is the risk worth the reward? That's basically what you're saying. When you step into this market, is the reward going to be there? I don't see the reward there right now. I mean, we moved like 1/3% in currencies today to the upside or the downside, and the equity market had about a 1.5% swing. So I just don't see that. But let's go into the charts and see if we can find anything we like. I want to start off with the cryptos here and just to show you where we are. So here we are at that big fall, rallied back up. We came down. I'm on a 4-hour chart here. You can see that we're basically sideways over the last 4 or 5 days. Come over here to Ethereum, sideways. They're all just kind of hanging out there. Which one do I like the best? Probably Ethereum, best of all, but I just don't love it here. This isn't a great setup. I mean, take a look at this. If you're a trend trader, this isn't a great setup. If you're looking to be a range-bound trader, could you make a case that, hey, we're bouncing between 3,900 and 4,300? Maybe. But here we are smack dab in the middle of it. Not a big fan of anything in the crypto world. We take a look in the Forex world. Here we've got yen. Yen is going higher, but look at this chop. This is untradeable. Nothing, 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 nothing. Boom. 8 hours of move. Nothing, 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 nothing. 30 seconds of a move. It's just not a great chart. I look at this and I say, no thanks. I don't want to be sitting at dead money and then have some move come out of nowhere to either be good or bad for me at some random points. I want to find something a little bit more trending, and here we have the dollar. Dollar's trending nicely. This is the currency Ankit liked for the week. And you can see all we're doing is pulling back, basing. We just had a breakout. We just had a pullback. Here's the question. Is this a buy here? Is this a buy? Technically speaking, it looks like it could be. It's coming back to that moving average. Looks like we're getting a little bit of buying here. Not strong buying, but dollar looks okay here. The question is it the best currency? And then I come over here to the European currencies, and I just like them so much better. Here's Swiss franc. Swiss franc having nice runs, pullbacks, runs, pullbacks, runs. Here we got this little base here over the last day. I really like Swiss franc even more than dollar here. And I actually like euro probably even better than Swiss franc here. As you can see, euro is actually trading almost above this last point, where Swiss franc isn't. We're pushing up right at that point with the euro. So for me, euro's number one. Then we take a look at pound, nothing. CAD, nothing. And then we go over here to the Aussie Kiwi, and we can see, hey, these are trending to the downside. Aussie runs up, falls, has a little rally. Again, this isn't a real strong bear rally here, but you could call it a bear rally. But big support down here. Big support. Kiwi has been falling and falling. Anytime it does a rally, you want to sell it. So it's pretty clear this is where we are. We got Swiss franc has been the strongest here, followed by the euro. I actually like the euro a little better, but we'll look at the euro Swiss franc on a chart. And then it's Aussie Kiwi. We even got a bounce today, but the Aussie Kiwi didn't bounce very hard, which tells me that's exactly where you want to be. Aussie Kiwi are usually risk on trades, and when the market bounces and they don't really bounce, it's telling you that they don't want to be strong. So the first pairing I'm going to take a look at is which is better, Euro or Swiss franc. Now, over the past couple of weeks here, the Euro has definitely been declining against Swiss franc. And here we are, still declining. Moving averages going down, parabolics are going down. We've got some grain candles here, but looking at this chart, I have to go long Swiss franc first. That's just where it is right now. If we can get above this moving average, then maybe the Euro goes to the top of the board. But no, with falling moving averages, it's clearly telling me the Swiss franc is still stronger than the Euro, regardless of the other charts that you see. So for me, Swiss franc is number one. And then the question, which is the weakest, the Aussie or the Kiwi? You can see the Aussie has been falling against Kiwi. We got the moving average sloping down. So that tells us that Aussie Swiss franc is the trade to look at based on relative strength and weakness. Big drop, rally back, fall down. We're kind of basing here. Nothing looks great here. Nothing looks wonderful here. Take a look at an hourly chart. Look, I like the trade. Here's the problem. I don't love the timing here. Look at where this is on a daily chart. We're just hanging on that support level. For me, this is my favorite trade, but looking at this daily chart, it's got to break. It's got to break that. Looking at the 4-hour chart, there's nothing telling me I got to get in now. The 1-hour chart, nothing's telling me to get in here right now. I don't want to sit in dead money for 24 hours, especially in this super choppy environment. So I think if you're going to trade this, you got to have orders ready down here at like 5170, 5170 would be an entry. If you want to be a little earlier than that, then I think you can go back to this last swing low. Say, okay, 5178, 5177. Somewhere in there, you could be hanging out with the sell order. But again, I don't see anything that is saying there's going to be a big, fast, strong move here in the next 24 hours. What that means is we got a high volatility environment. I don't want to be sitting in trades for 2 to 3 days as they're not going anywhere because, again, these tweets can come out at any time. We can get these spikes anytime. And if I have stops that are close, they're going to get triggered. They're going to get hit. You have to be very conscious of the market you're in right now. We always say at Maverick, trade the market in front of you. Understand that it's dead money. Then we get these big moves and they come out of nowhere and they're not predictable. It's a hard market to trade. You can still trade it, but just be aware of the market you're in. And if the move goes for you, great, tighten up those stops. If the move goes against you, get knocked out, but trade less, not more here. That is the word of wisdom I'm leaving to you. Thanks for joining me. Goodbye, everyone.